Britain feels rich in motion, but poor in reality. Streets stay busy, lights stay on, yet more people than ever are silently drowning in bills. Pay rises vanish the moment they arrive, groceries shrink while prices climb, and every small victory feels borrowed. The average household works harder just to stand still, trapped in an economy that rewards survival over success. What once felt like temporary struggle has turned into a permanent lifestyle. Behind every paycheck lies pressure. Behind every smile, a silent calculation. Because in today's UK, earning more doesn't mean living better. It means lasting longer in debt.
Number 1. Falling real disposable income. Across the United Kingdom, people are earning more on paper, yet feeling poorer with every passing month. After inflation, taxes, and higher living costs, the actual amount families keep at the end of each month has dropped sharply. According to the Office for National Statistics, real household disposable income fell by 1.0% in early 2025, the steepest decline since the pandemic rebound. It means workers may clock longer hours, accept overtime, or chase side jobs, yet find that their weekly food shop or rent consumes nearly everything. The numbers are not abstract. They show why many now describe life as surviving rather than living. Everyday reality paints the picture more clearly than charts ever could. Supermarket baskets that once cost £50 now pass £70. Energy bills hover around record highs despite global prices easing. Even small luxuries, a family outing, a takeaway meal, a weekend drive, feel like financial risks. Families delay replacing worn-out shoes or broken appliances because the buffer that once protected them is gone. The psychological weight of constant arithmetic, calculating what can be cut or postponed, is becoming the quiet soundtrack of ordinary life. That erosion of breathing room is the essence of a country turning skint. What makes this decline especially dangerous is how invisible it feels. People assume they are mismanaging their money, not realizing the national equation has shifted against them. Real income determines hope. When it shrinks, ambition does too. Workers save less, borrow more, and hesitate to plan beyond the next payday. The cycle feeds itself. Weaker spending slows growth, which suppresses wages, which tightens budgets again. A society cannot thrive when its citizens are trapped between earning enough and living enough. This is the first sign of the United Kingdom's biggest money trap.
Number 2, wages rising but not enough. Across countless workplaces, pay packets have grown in numbers but not in power. The average weekly earnings in the UK rose around 5% this year, yet inflation swallowed nearly all of that gain, leaving workers only about 1% ahead in real terms. That means every small raise feels like running up a down escalator. You move, but you stay in the same place. People celebrate a promotion, then face a rent increase or higher food prices that erase the progress overnight. The illusion of improvement hides the quiet truth. Real purchasing power is still shrinking for most. For millions of employees, the monthly budget feels tighter even after pay reviews. Essential expenses, housing, childcare, transport and energy keep climbing faster than wages can match. Many public sector workers, from nurses to teachers, still earn less in real value than they did 5 years ago. The strain shows up in second jobs, longer commutes, and cancelled holidays. Behind every spreadsheet about wage growth lies a story of someone working harder just to stand still. Economic headlines may suggest recovery, but the mood in homes across the country tells another story entirely. This imbalance isn't temporary, it's structural. A decade of low productivity, weak investment, and profit-driven cost controls have limited how far wages can climb. The result is a workforce exhausted by effort, but starved of progress. When pay rises no longer lift living standards, ambition fades, spending slows, and anxiety takes root. The frustration of working adults who see their effort devalued by rising prices is now one of Britain's deepest wounds. This wage illusion feeds the wider money trap, making people believe they are earning more when they are actually earning less with every passing year.
Number 3. The cost of living crunch. Every corner of the United Kingdom is feeling the bite of rising prices. From the price of milk to the cost of electricity, every essential has climbed faster than pay.
According to Money Advice Trust reports, in 2025, nearly 7 million adults are behind on at least one household bill. That's not just a number, it's a snapshot of modern Britain, a place where turning on the heating, paying council tax, or refilling the petrol tank has become a careful calculation. For many families, survival now depends on choosing what to pay late, not what to buy next. Grocery inflation may have slowed, but the total cost remains punishing. A weekly food basket that cost £60 2 years ago can easily touch £80 today. Rents are rising at their fastest pace in decades. Mortgage rates have doubled for some, and energy bills still hover well above pre-crisis levels. A single unexpected cost, a broken boiler, a car repair, a child's school trip, can collapse a household budget. This relentless climb has created a new kind of poverty, one that doesn't always look poor on paper, but feels it every day. People are not overspending, they are overcharged by an economy outpacing their earnings. This cost of living trap doesn't just damage wallets, it reshapes behavior. Families avoid gatherings, skip meals, and rely on credit to bridge the gap between paydays. The nation's collective stress rises with every direct debit reminder. It's not laziness or bad planning, it's arithmetic. When basic needs cost more than growth allows, everyone loses ground. The result is a quiet erosion of stability, where ordinary people shoulder extraordinary costs just to keep the lights on. This squeeze forms the centre of the money trap now gripping the UK economy.
Number 4. The debt spiral deepens. When pay and prices refuse to meet halfway, debt fills the gap. And that gap is widening fast. The Money Charity's 2025 data shows total household debt now exceeding £2.5 trillion, averaging £66,000 per household. Credit cards, buy now, pay later schemes, and personal loans have become lifelines for everyday living rather than luxury spending. Millions use credit to pay for groceries, rent, or energy, not for holidays or gadgets. The cost of borrowing, once invisible under low interest rates, now cuts deep with higher repayments, late fees, and growing balances that never seem to shrink. This growing dependence on debt changes how people think about money. Borrowing no longer feels like a choice, it feels like a requirement for survival. Households shuffle payments, paying one bill today and another next week just to avoid default. The pressure mounts quietly month after month until a single missed payment triggers a cascade of penalties. Emotional exhaustion follows financial stress, creating a climate of fear and uncertainty. Behind closed doors, families argue about credit limits, skip meals, or borrow from friends. Debt has shifted from a financial tool to a permanent companion in millions of British homes. The spiral deepens because wages and savings can't catch up. Once debt becomes part of survival, escaping it demands sacrifice few can afford. The average British worker may owe nearly their entire annual income, a dangerous ratio that limits freedom and future planning. When people spend tomorrow's money to survive today, the nation's economic pulse weakens. Every pound borrowed to cover essentials is another pound stolen from future opportunity. The UK's money trap tightens most cruelly here, not in the act of spending, but in the desperate act of borrowing to live another day.
Number 5. Housing costs crushing stability. For most Britons, the roof over their head has become the heaviest financial burden they carry. Renters are seeing record-high increases, with average rents in England rising more than 9% year-on-year in 2025, the fastest jump in over a decade. Homeowners are not spared either. Mortgage holders face monthly repayments hundreds of pounds higher after the Bank of England's rate hikes. What once was a symbol of progress, owning a home or living independently, now feels like a slow-moving trap that swallows a third, sometimes half of household income before other bills even begin. The impact of this strain reaches every part of life. Young adults delay moving out, couples postpone having children, and retirees downsize earlier than planned to cut expenses. Tenants face fierce competition, with bidding wars for ordinary flats and landlords passing every cost increase to renters. For many, the dream of home ownership fades into myth. The emotional cost runs deeper than the numbers. Homes were meant to offer safety, but now they represent uncertainty.
When housing becomes a threat rather than a foundation, confidence in the future erodes. People start making decisions from fear instead of ambition. This housing squeeze amplifies inequality. Those who bought property years ago benefit from appreciation, while newcomers are locked out entirely. High housing costs trap workers near low-wage jobs because moving closer to opportunity is unaffordable. The system rewards ownership and punishes renting, widening generational divides. When half a nation spends most of its income on shelter, there's little left to build savings or invest in education. Housing is no longer just an expense, it's the centerpiece of Britain's financial imbalance. Every rent hike and rate rise tightens the chain, making this one of the cruelest layers of the UK's money trap.
Number 6. Stagnant living standards. Despite years of promises about growth and recovery, most people in Britain feel stuck. The Resolution Foundation's Living Standards Outlook 2025 reports that average household incomes remain almost exactly where they were in 2019. 6 years have passed, yet real progress has vanished. For many families, every pay raise is offset by another price hike, tax squeeze, or energy surge. It's not just an economic slowdown, it's a slow theft of progress. The sense of advancement, the belief that hard work guarantees a better life, has been replaced by quiet resignation. People aren't chasing dreams anymore, they're just trying not to fall behind. This stagnation shows up in subtle, human ways. Parents cancel extracurricular activities for children. Workers skip lunch breaks to afford fuel. Older generations downsize sooner, not out of choice, but necessity. The national conversation has shifted from growth to endurance, from planning holidays to calculating survival. Living standards are more than pay and prices. They're about confidence, hope, and dignity. When people no longer believe tomorrow will be easier than today, something fundamental breaks inside society. The frustration isn't just financial, it's emotional, and it's spreading across age groups and regions alike. What makes this stagnation dangerous is how quietly it normalizes struggle. A decade ago, tightening the belt was temporary. Now, it's a lifestyle. Businesses hold wages flat, governments measure success by avoiding recession, and citizens learn to expect less each year. This slow erosion doesn't create sudden collapse, it breeds exhaustion. Productivity suffers when people lose motivation to strive. Communities weaken when everyone feels too tired to hope. Living standards may not crash overnight, but when they stall for years, the effect is just as devastating. Britain's economy survives, but its spirit is fading under the weight of stagnation.
Number 7. Regional and generational divide. The United Kingdom's economic pain is not shared equally. Where you live and when you were born now determine how financially secure you feel. A worker in London or the South East might earn more, yet faces punishing rent and commuting costs that erase the advantage. Meanwhile, someone in the North or Midlands may spend less on housing but struggle with fewer job opportunities and lower wages. According to 2025 data from the Institute for Fiscal Studies, the income gap between Britain's richest and poorest regions has widened to its largest margin in over 20 years. Geography has become destiny for millions of households. Generations are equally divided. Baby boomers, who bought homes when prices were manageable, now hold the majority of national wealth. Younger generations, meanwhile, are trapped in rent cycles with little chance of saving for deposits. The cost of entry into adulthood, university debt, expensive housing, stagnant wages is the heaviest it has ever been. Many 30-somethings earn respectable salaries, but remain financially fragile, one emergency away from debt. For the first time in modern history, younger people can expect to be poorer than their parents. This reversal of fortune fuels quiet resentment and hopelessness. The divide weakens social unity. When one part of the country lives in comfort while another counts coins, trust erodes. The same applies between generations. Frustration replaces gratitude, and progress turns into privilege. Britain's economy may appear unified, but the lived experience is fractured. These inequalities are not abstract statistics, they shape opportunity, mobility, and national morale.
The regional and generational split is more than unfair, it is unsustainable. Until every citizen has a genuine path to stability, the money trap will continue dividing Britain into two very different nations living under one flag.
Number 8. Tax burden and policy pressure. Even as wages struggle to keep pace with inflation, the tax burden on working people has quietly climbed to its highest level in 70 years. Frozen thresholds mean that ordinary pay rises now push millions into higher tax bands, a process economists call fiscal drag. The result is subtle but brutal. People earn more nominally but lose a greater share to taxes and national insurance. In 2025, the Office for Budget Responsibility estimated that fiscal drag alone would raise over £40 billion for the Treasury by 2028. For families already squeezed by costs, it feels like paying more for less. Government policies have deepened the sense of imbalance. Energy subsidies were scaled back, child benefits remain capped, and council tax continues to rise faster than local incomes. What once looked like safety nets now feel like sieves. Households that hover just above benefit thresholds find themselves punished for earning slightly more, while wealthier individuals continue to exploit loopholes. Public frustration grows not just from paying higher taxes, but from seeing how unevenly they are applied. People feel that the system rewards assets, not effort, that labour is taxed more harshly than wealth. This policy squeeze erodes faith in fairness. Citizens begin to view work not as empowerment, but as a burden that barely sustains survival. When take-home pay shrinks under the weight of rising deductions, consumption slows, saving collapses, and ambition fades. Fiscal policy that was meant to stabilize the economy is now quietly draining it of vitality. Taxation should fund opportunity, yet for many, it feels like another link in the chain keeping them trapped. The British money trap isn't only built by prices and debt, it's reinforced by a system that demands more from those who already have the least to give.
Number 9. Weak financial resilience. Decades of easy credit and low savings have left millions of British households dangerously exposed. According to the Bank of England's 2025 Financial Stability Report, nearly 1 in 5 families would struggle to cover a single month of expenses without borrowing. Savings rates, once a buffer against hard times, have dropped to their lowest level in years. Many households have less than £500 set aside, not enough to handle even a minor emergency. This fragility means that every rent increase, energy surge, or car repair can push people into debt, creating a cycle of stress and dependency that feels impossible to escape. This weakness isn't just about poor budgeting, it's structural. Wages haven't grown fast enough to build reserves, and the cost of living keeps eating into what little people can save. With inflation still above the Bank of England's target, every pound saved loses value over time. Families that once kept modest safety nets now rely on overdrafts, credit cards, or payday loans to survive shortfalls. A culture that once prized thrift has been replaced by one that normalizes financial juggling. The result is a nation where resilience, the ability to withstand shocks, has been quietly eroded from the middle outward. The danger lies in how quickly small problems become disasters. A single missed payment can trigger penalties, damage credit scores, and limit access to affordable borrowing. Without savings, recovery becomes harder, leading to more debt and deeper anxiety. Economic stability depends on the security of its citizens, yet millions now live without a cushion. Britain's money trap isn't just about poverty, it's about the disappearance of protection. When survival depends on luck instead of planning, a society loses not only its wealth, but its peace of mind.
Number 10. The fragile future ahead. Britain's financial tightrope is stretched to breaking point. After years of stagnant pay, high taxes, and relentless living costs, the country now faces the risk of another shock, and few are prepared to handle it. The Bank of England's early 2025 figures showed a sharp £1.1 billion surge in consumer credit in just 1 month, proof that people are borrowing more simply to stay afloat. If another energy crisis, interest rate spike, or global slowdown hits, millions could tumble from discomfort into full-blown hardship.
Economists warn that this isn't a distant threat, it's already visible in empty savings accounts and growing arrears. The fragility extends beyond finances. Mental health services report record stress linked to money worries, while small businesses struggle with late payments from customers equally short on cash. Families postpone major life choices, marriage, children, home ownership, because the future feels too uncertain. This delay in normal milestones is reshaping the rhythm of society. The sense of national confidence that once defined the British middle class has eroded into caution. People no longer ask, "What's next?" They ask, "What can I still afford?" That quiet shift in mindset marks a deeper cultural crisis hidden beneath the statistics. Yet fragility can also be a warning, a signal that change is overdue. The system that once promised stability now demands reinvention. Without reforms in housing, taxation, and wage policy, the pressure will only grow heavier. Resilience requires more than slogans. It needs fair opportunity, real income growth, and policies that protect workers rather than punish them. The biggest money trap in the UK isn't just about numbers, it's the illusion that this way of living is sustainable. The cracks are showing, and the question now is how long the country can balance before it breaks.
The story of modern Britain is not one of laziness or failure. It's a reflection of a system stretched beyond fairness. People are working, saving and hustling, yet their efforts no longer guarantee stability. The gap between income and survival has become a canyon, swallowing time, energy and dreams. Families are not living badly, they are living cautiously, planning around bills instead of building toward goals. From housing and taxes to wages and debt, every layer of daily life now demands more while giving less. The nation that once built its strength on hard work now watches that very effort lose value. Still, this moment doesn't have to end in despair. Awareness is the first defense against any trap. When people understand how the cycle works, how policy, pricing and pressure combine, they can start demanding better. Britain may be skint, but it is not powerless. Change begins when citizens refuse to normalize struggle. If you felt this pressure in your own life, share your story below. Like this video to push the message further. Subscribe for real insights into how the economy affects you. And watch our next breakdown, where we reveal how to escape the UK's money trap before it tightens.